We're talking now with Dr. Todd Hubbs, our OSU Extension crop marketing specialist. And Todd, since we last saw you, a lot has been happening in terms of prices and the weather, and kind of give us an overview and get us up to speed.
Yeah, we had the June acreage report and the June stocks report, which closed out the marketing year for wheat. Both of them were somewhat bullish for wheat, in that the acreage came in a little lower, harvested acreage, and the stocks were a little lower than USDA was projecting, which is good. We had supportive stocks for corn. Acreage didn't move around too much, but I think right now everybody's just speculating on the spring crops and what they're going to look like with all the weather that's going on.
So some of that translated to prices already?
It did. We've saw a run up in prices since June 30th was when the reports came out. We've seen consecutive days of prices moving higher across the ag complex. And then on Monday of this week, which was July 6th, we just saw prices explode coming out of the holiday weekend. And it's a really good pricing opportunity, in my opinion, depending on what you're marketing and where you're marketing. But you know, when we see these kind of big rallies, particularly in soybeans, it's a good opportunity.
Talk about the weather a little bit. We're used to it in Oklahoma, but parts of the United States that don't normally see this high of temperatures, and Europe, that's factoring in as well.
It is. Like really hot. Let's go to Europe. For really hot temperatures in Europe, they're just not used to this kind of heat dome pressure. And it's impacting their wheat crop, which they're starting to harvest in Western Europe, particularly France. And there's some concern about in Eastern Europe, like Germany and Poland and Latvia and Estonia, those areas, because it's just been so hot as the crop was finishing. It's the winter wheat crop. How that turns out over the next month is probably going to determine a lot about wheat price dynamics over the next 3 months.
Talk more specifically about what you're seeing with soybean prices recently.
Well, just a huge rally coming out of the holiday weekend, over 30-cent move, sort of came out of nowhere, and that I think it's a build-up, it's a speculation on the crop here, and our usage in general. We've seen a really strong crush this year related to biofuels, and we've seen soybean oil prices drop back into the high 60 cents a pound range. We had them up in the high 70s a month ago. I think it's probably going to go back there, and the crush margins are pretty good. So I think for soybeans, we just saw this move into it coming out of the holiday weekend. Some of it's to do with Chinese buying. You know, we had these deals with China that maybe they're going to buy 25 million metric tons. I have no reason to doubt them, but the timing's there. So they're really big bargain shoppers, and I think they saw a bargain. And so we saw this sort of a technical rally coming out of the weekend, sort of underlying fundamentals, but it sort of lifted the other markets with it, so it's pretty positive.
This is certainly some positive news to talk about, but we still have to be realistic and kind of what's the main takeaway for producers with what's going on currently?
Yeah, the recent rally sort of brought us back into areas we were in March, but nothing like we saw after the May report. And so we're still not back to the highs we saw, and it's probably a low probability, barring a weather issue, a serious weather issue in the U.S., or that European crop having major problems, that we get back to those levels. So, you know, we get a rally like this, it may be prudent to reward that rally with some sales, depending on if it's at a level you think you can handle and is profitable.
All right, Todd, great information as always. We will see you again next time. Thank you.